The bear market is over. The S&P 500 has gained 20% since its October low, and that indicates the end of the bear market. Inflation is coming down rapidly, and in China, it's near zero. The Fed is going to stop raising interest rates. What more good news do we need? I am Dr. Stephen Fox. These are my personally selected stocks. This is not financial advice, as I do not know your personal situation. Hey everybody, welcome to my channel. Today I'm going to explore all the macroeconomic factors that indicate that we're headed for a bull market. And then I'm going to take you through my portfolio. I've been gradually getting into this bull market and increasing my stakes, but I need to do a lot more. I have way too much money in money markets, and many of you may have that same problem, but it's time to get bullish. Taking an overall look at my investments, I have about 1.2 million in stocks. I have about 1.6 million in money markets, and I have almost 2 million in real estate. So I definitely think that things have turned, and I'm going to tell you why, but they have become positive enough. We have this confirmed uptrend, and it's time to move some money from money markets into stocks. So I've been buying a lot of artificial intelligence and technology stocks. I believe you have to go with the trend, and this is not a fad. This is a basic change. It's going to be almost as big as the internet itself because it has such dramatic effects on productivity. For example, it speeds up coders, computer coding. It speeds that up by about 7 times. Unbelievable. But as you shall see, I think technology is going to pull the non-technology stocks up eventually. I don't think they're going to pull technology down as much as technology is going to pull them up. And so I've started to diversify and to invest in some more standards stocks, I'll call them, sort of some staples, some things in home building in particular, which surprisingly has been on fire, which really negates the theory that we're in a recession. How can home building be on fire if we're in a recession? The VIX shows that we're in a bull market. You know, if you're below 20, you're usually in a bull market if the VIX is below 20. And now the VIX is in the 13s. Okay, we are in a bull market. And inflation has stopped accelerating. It's coming down. Trueflation, which uses many more sources of data and is much more current, shows that inflation is running at 2.73%. That's not far from 2%. China recently reported that their inflation rate is near zero. Their CPI, their Consumer Price Index, was 0.2%, and their PPI, their Producer Price Index, was even lower. It was a negative 4.6%. And that usually leads to the CPI because the producers pass the savings on to consumers eventually. But it's in deflation. So China looks like they're going to be in deflation, probably because they're in a recession. And it's very unlikely that the Fed is going to continue to raise interest rates. They're meeting on June 14th when they announce the interest rate. I think they're going to pause because the interest rate does not need to be raised, and I'll tell you why. The Fed has 2 ways of fighting inflation. One is to sell assets from their balance sheet, which has the effect of raising the interest rates in the bond market. and the other way is to raise the basic interest rate. But I think they're going to pause on that because they want to offload their balance sheet, which will have the effect of raising interest rates in the market. So I think the Fed needs the room of pausing so that they can offload their balance sheet. They're not going to raise rates. The star of my little group of stocks has to be Super Microcomputer. I think of them as making servers for artificial intelligence, the complex servers. And looking at the chart, you can see that it's still within the Bollinger Bands. The orange bands around that are the Bollinger Bands, and that's within 95% probability of where the price should lie. And it's still within that, although with a relative strength of 84, it's probably overbought. But do I care? No, I don't. It's gone from $84 at the beginning of the year to $261 now. And an analyst just came out and predicted that it was going to 300. So I feel like I'm sort of on a mini Tesla ride with this stock, and I'm going to let the winners run, which is always good advice. I have over $73,000 in Tesla, and it's doing wonderful, of course. It's up for 11 days in a row. And the reason for this is the Model 3 fully qualified for the $7,500 tax credit that they're getting from the Inflation Reduction Act. And so the price of the Model 3 is down to about $30,000, which makes it much more affordable for a lot more people and will increase sales. And also with their charging network, they signed agreements with General Motors and with Ford to let them use their charging network. And it's estimated that having them use the charging network, that's going to be very profitable for Tesla, and they will make probably about an extra $3 billion per year. So everything's coming up roses for Tesla right now. And I think we got a trend here on this stock, and this stock just doesn't want to quit. I think I'm going to be holding it forever unless something weird happens. But I trade in and out of it, and I've always done that successfully. So I'll probably keep doing that. So looking at the chart, Tesla is selling at about $244. It started the year right around 200, and that's where I bought back into it again because I could see it was going to make a run. And I think we're headed for 300. You know, I don't really care that it's at the top of the Bollinger Band. It's overbought at 84% or so. It's always, the statistics are always against Tesla, and it just keeps going because it has such an incredible future ahead of it. So I think the followers of Tesla are looking out ahead, not in terms of years, maybe decades with this stock. Another major holding of mine is Broadcom, whose symbol is AVGO, and they are a semiconductor manufacturer. They make chips for artificial intelligence. They're also part of the backbone of the internet as they make infrastructure software. So it's quite a complex company. It's a standard. It's a major company, and it's gone up fairly nicely. I think this is one to hold for the long term. It's definitely going to be important to artificial intelligence, and I think it's going to be very profitable. And Broadcom is an exciting stock. Looking at the chart, you know, it started out the year a little bit under 600. April into May, it decided to jump 200 points. Wow. It has a healthy relative strength of 73, which is good, and it's at the top of its Bollinger Band. But again, with the intensity that artificial intelligence is taking over, and it's going to be faster than the internet revolution. The internet, when the dot-com bust happened, we could see what was going to happen, but it was going to take time. The thing with artificial intelligence is it's already about halfway developed. You know, this is not something that's a theory. It's something that's being actively used now, and it's just come into prominence with Chat GPT and these things like the programs that help coders code faster, 7 times faster. This is a game changer, this artificial intelligence, and it's not a fad, and it's not something to be ignored, and it's real. I have about 74,000 in C3 AI, whose symbol is simply AI, which that is the major benefit of this stock, is that it has the symbol AI. And it's had an uphill course since the beginning of the year. Looking at the chart, you can see that it started out, since the beginning of the year, it started out at about $11, and now it's at about $36, and its relative strength is 62, which is decent. You can see that it's a bumpy ride, okay? It recently had a spike up, and then it's been consolidating. So it's trying to make up its mind how much it's going to go forward. It's been founded and developed by Tom Siebel, who's a billionaire, a software expert who previously had Siebel Systems, which he sold to Oracle. And so it's in good hands. They more or less sell software to companies and to the Defense Department that will fulfill all their needs, supply chain wise, inventory wise, customer management wise, fraud detection, so on and so forth, even energy management. It's a whole package that will do pretty much what the company wants it to do. I put 65,000 into Microsoft, and they started the recent attention to artificial intelligence with their Chat GPT, which they put on their Bing browser. And they also started a service which is a subsidiary to Microsoft. It's called GitHub, and it's GitHub's Copilot, which coders use to save them time. It helps them with the coding by taking care of the boilerplate, boring stuff, so that coders can focus on the creative part of their coding. Looking at the chart, you can see that Microsoft started out the year at around 240, and now it's around 326. So it's had a nice upward course. It's near the top of its Bollinger Band. It's above both its 20-day and 50-day moving average. The 50-day moving average is the purple line. The 20-day moving average is the orange line. And the orange line is used for the Bollinger Band to put a 95% probability of where the price should probably be. I have about $61,000 in Google, GOOGL, which is actually Alphabet, which is the parent company of Google. And it's gone up from about $88 to $126 since the beginning of the year. Google, of course, is trying to catch up with Microsoft with their Baird in AI system, which deals with creating conversational language so that it summarizes the data and gives it to you in conversational language rather than simply just listing the sites where you can get the information. I have about $56,000 in Bell Fios Incorporated, whose symbol is BELFB. And looking at the chart, this has recently spiked up. It's breaking out, and it's at the top of its Bollinger Band, and its relative strength is about 78. When it gets towards 80, some would say, well, it's overbought, it's going to go down. In this case, in the way the market's acting, I think we have multiple breakouts. So I see this as breaking out, and I'm going to hang on to it. I have about $53,000 in an old favorite on semiconductor company, and it's always been a good performer. Since the beginning of the year, looking at the chart, it's gone from about 60 to almost 88. So this is one that I don't worry about. It's just a good, solid company. I put about $53,000 into Sterling Infrastructure, and they do civil infrastructure construction and rehabilitation. And I did this to diversify, as the housing and construction is just on fire, and that is such a strong argument against the idea that we're going into a recession. And looking at the chart, you can see that it's spiked up, especially recently. It's gone from about $33 to about $53. Its value is probably around $60, and its price to earnings, its PE is about 15. Its earnings growth rate is a solid 19%. So you can see from the chart that it's near the upper range of the Bollinger Band because it's breaking out. I put about $47,000 into ST Microelectronics, whose symbol is STM. And looking at the chart, you might be wondering, why did I invest in this company? And it's different from my usual investment in that I think it's a turnaround story. They've had a rough time of it, but they do have an upward course. Its price right now is about $47. Its value is about $67. Its earnings growth rate is of excellent 25%, and its price to earnings is only about 12. So I think this is a turnaround story that I want to benefit from. Installed Building Products, to me, looks like a construction sort of company that's sure to keep going up, especially with housing being built a lot in this so-called recession some think we're in. Since the beginning of the year, it's gone up about from $88 to almost around $118. It makes things that are necessary for all houses on the inside. They do shelving, they do cabinets, they do insulation, they do rooftop gutters. It's the type of thing every house needs, and so they benefit generally from a construction boom. IBP is above its 50-day and 20-day moving averages, and its relative strength is about 56. Extreme Networks, symbol EXTR, makes the extremely advanced network software that's needed for artificial intelligence, and they make network equipment as well. So you can think of this as the network stock that helps artificial intelligence sizzle. EXTR has gone from about $18 at the beginning of the year to now $23, and its relative strength is 80. So some would say it's overbought. I think it's actually a sign in this case that it's breaking out. and it's at the top of its Bollinger Band. I think that in this case, it's a sign of a breakout because the market in general is going bullish. EXTR has an earnings growth rate of 28%, which is excellent, and it has a PE of 21. My EXTR stock worth is now about 46,000. I have 43,000 in Insight Enterprises, which helps governments and businesses set up their information technology systems, and it's done well. Since the beginning of the year, it's gone up from $102 to about $144. Looking at the chart, and you can see the Bollinger Bands, and it's near the top of its Bollinger Band. But again, I see these as breakouts. And the trend, the reason I say that is the general trend of the market is breaking out. And this is following that trend. And technology has been benefiting heavily. NSIT's relative strength is 76, which is healthy. I put 42,000 into JP Morgan, which is a symbol JPM, because it benefits from the turmoil in the banks. As the other banks are closing and as it rescues banks, it makes lots of money on the banks it rescues. Plus, people are putting their money more into JP Morgan simply because it's seen as the largest and most stable bank in the United States, which it is. So I don't see this as being a big deal. It's a long-term hold. I probably won't pay much attention to it just because I don't expect it to have any big downturns. But I think it's a steady grower, and I probably need some more steady sorts of stocks that I don't need to worry about. And then I had to buy NVIDIA. It's the engine of artificial intelligence. Its symbol is NVDA, and it recently had a monstrous jump. As you look at the chart, it's trading in the 380s. It's hit 400 at times, but I bought it in the 380s, and realizing that I'm buying it probably at a high point, I bought about 100 shares, and so I own about $38,000 worth of it, and I will just keep that. And if it goes below 360, I'll buy more. In fact, I'll buy way more if it goes down. It's just incredible. When you listen to Jensen Huang, the founder, the co-founder, and CEO of NVIDIA, he's just incredible. It's just amazing what they're coming out with. I urge you to listen to any long lecture of his. You will learn a lot. And I always like to have at least one stock that's extremely speculative, that it's a wild card, and I wanted it to be in artificial intelligence, and that was GitLab, GTLB. And the reason I bought it, two reasons. One reason was that it was breaking out, but the other thing is they do the coaching of coders. They do the boilerplate things that coders don't need to waste time doing, so that they can focus on their creative efforts on the important parts. And so I like it, how much artificial intelligence is speeding up coders' programming. And so I definitely want to be invested in that. And this I happened to see was breaking out, and I couldn't resist it. And I did buy a significant amount. And looking at the chart, GitLab is above its 20 and 50-day moving averages, and its relative strength is 74, which is good. It's definitely breaking out. It's a speculation. It's something to put away and see where it goes. Lastly, I bought 1,000 shares of TQQQ, and the QQQ is the 100 largest companies on the NASDAQ, and the TQQQ is the triple leverage of that. So it's a very bullish fund. For every dollar the QQQ goes up, The TQQQ goes up $3. So it makes a good day trading tool, but nowadays I'm making $10,000 to $20,000 per day in the market as it's going up. So I pretty much or just leave the 1,000 shares to sit there and gain. And I have a notion that I might expand my stock portfolio partially by buying as much as five to 10,000 shares of it. We shall see how wild this gets. When you do that, it's very speculative, and you got to keep a close rein on it, and you got to be right on it. So unless you can pay, I really didn't do this until I was able to devote full time to watching it, and I can do that now, and so I'm watching it and I'm making money. Thank you for listening and watching. Be sure to check back to see how I come out of this craziness. I think it's a bullish market. I got the bullish feeling. I can be bullish, I can be bearish, I can change on the flip of a dime. But I want to stick with these stocks. It's just, will the market will let me? In 2022, the market absolutely would not let you do anything but be a bear, except towards after October. Then it got better. So hopefully, I'm 70,000 to the positive so far this year. And I want to pick up the pace, and I think being bullish is the way I'm going to pick up that pace. Thank you.